Daniel Pronk, Unrivaled Investing, Tom Nash, and other investing YouTubers. Which stocks are you buying at the moment? Watch this video till the end and find out. In case you find this video helpful, don't forget to subscribe and let's just get right into it. The first stock is Nvidia, ticker symbol NVDA. It has fallen about 50% from the all-time heights and is now trying to bounce back. One share of Nvidia is now trading at about $187. TipRank's analysts forecast about 45% upside potential over the next 12 months for Nvidia stock. Colin from the investor channel goes through Nvidia numbers and also looks at the technical chart. In his opinion, this was a very strong quarter for Nvidia, great numbers, fantastic performance and accelerated buybacks. There's a lot of things to like about Nvidia. Looking from a technical perspective, from about 115 up to about where the stock is right now, at around $160 per share, this is the area that investors could start buying for a long-term investment. To sum up, Colin thinks that this major pullback into the area where valuation perspective starts to make sense creates major buying opportunity, and he personally will be adding Nvidia to his own portfolio. Bryant in this video analyzed recent Nvidia earnings and run through their investment frameworks. In their opinion, there was so much to like about it in this quarter. Numbers were just insane. The increasing margins make it clear that this company has the best product out there and the thesis is still on track. Bryants both agree that Nvidia is a very high quality business and every investor should put Nvidia stock in the watch list. On the TipRanks channel, Tom Nash also analyzes Nvidia stock. In his opinion, looking at the actual numbers, Nvidia actually is not such a bad company to invest in right now. The margins of this company are quite insane. It has a standard growth rate and it also has one of the best balance sheets in the industry. Tom uses discounted cash flow valuation method to estimate value of Nvidia company. He believes that this company is undervalued but only slightly by 10.5%. Next stock is Facebook or Meta, ticker symbol FB. It seems that Facebook has found a bottom and now is in consolidation phase. Facebook is now trading at about $190 per share. TipRank's analysts see about 43% upside potential over the next 12 months for the Facebook stock. In this Joseph Carlson video, he talks about valuation of his entire portfolio, and Facebook is one of his best stocks. In his opinion, looking at the Meta numbers, everything looks cheap, free cash flow looks incredible, forward PE ratio is 16, which is heavily discounted. Joseph claims he's bought back into the company because it's well below its fair value and he's going to continue to hold it. In his video, Daniel Pronk names 3 best stocks to buy at the moment, and Facebook is one of them. Daniel says that the market looks like a lot of panic and fear, but ultimately, it's leading Facebook to look like an incredibly attractive stock again and makes it look incredibly cheap. In his opinion, Facebook has one of the best balance sheets on the entire stock market. He also thinks that if Facebook continues to grow free cash flow over the next 5 years, even at small growth rates, then it looks like a screaming deal in the market right now. Jeremy from Financial Education channel also likes Facebook. He talked about it in a couple of his recent videos. He also thinks that it has one of the best balance sheets in the world. He claims that he started buying shares again, and when the price is under $200, it's just a fantastic opportunity as this company is so undervalued. And the third stock is Alibaba, ticker symbol BABA. Alibaba is trading at about $92 per share and is trying to break out from the huge downtrend. TipRank's analysts forecast about 66% upside potential over the next 12 months for the stock. Daniel from Unrivaled Investing channel discusses whether it's a good time to buy Alibaba shares. Daniel could see Alibaba well outperforming some of the major US indices over the next 5 to 10 years, just given how cheap it is at the moment. In his opinion, there's at least 100% upside just looking at the China commerce segment and ignoring all the other segments, which they also have. Daniel says he's still trying to figure out how much he wants to add to his portfolio, considering the whole risk and reward potential. Back to Joseph Carlson, Joseph makes the argument that it's trading out a 10 price to earnings and that the valuation is cheaper than any other big tech in the US. On paper, this company is the cheapest if it was a US-based company. In his opinion, looking at the concerns, going forward Alibaba is a hold for him, but on paper it's undervalued and it should be trading at $150 to $200 a share at the moment. These were our stock picks for the last 2 weeks. Hopefully it gives you an idea of the stocks that are getting the most attention at the moment, and if there's something that caught your attention, go and check the YouTubers mentioned for more detailed information. And see you in 2 weeks.